welcome to the panel of friends. The moderator, it's a really good friend of us, Sami. He is founder and CEO of a startup called Morrissey. And Morrissey is a pretty interesting mix because it's a really high growth and fast growing startup and has a real positive impact. But Sami, a little bit about yourself and Morrissey.
Yeah, anyway.
You guys hear me, right? Yeah, our startup is Morrissey, and we help scientists to solve problems faster by giving them access to scientific results earlier. And why I'm moderating this is since we have angel investors on board and also VCs, we didn't do an exit yet, but these guys that are coming all have experience from the beginning to the end. So I'm very happy to ask them all sorts of questions.
Then, Sami, it's your stage and your audience.
All right. So, crowd, come here, our 4 panelists. I'm going to introduce them once they're sitting, so we can applause them while sitting. There you go. It's already on. Okay. All right. So, to my right, I'm going to start to introduce. I'm going to introduce them real quickly, so we can start the discussion straight away. So Oliver Roskopf, to my left here, has a huge amount of experience in building startups. Just a couple of roles, including eDarling, Rocket Internet, and his latest ventures in the food industry. And he's actively investing out of Saarbrücker 21. He'll talk a little bit later about that. Let's also welcome Sebastian Pollok. He has years of experience in both funding and investing in startups. I guess his most prominent one is Amorelie. You guys most probably know that, hopefully know that. And now he's also actively investing. We have Sebastian Diemer on the panel as well. Also very prominent Berlin-based entrepreneur and has experience in raising enormous funding rounds. So Creditech and Finiata are his two companies. And when I talk about enormous, it's not just millions, but tens of millions. So he's the guy to talk to if you want to raise large amount of money. And then we also have Christoph Gerber, who is the founder of Lieferando. You all ordered pizza with Lieferando. I'm pretty sure about that. So you have been in contact with his startup. He exited very successfully and is now building his new venture. And maybe he'll talk a little bit about that as well. So a round of applause for our great panel.
Nicht zu laut, nicht zu laut.
And so all panelists have incredible experience in both raising and exiting. And the first question that I would like to ask to you guys is, when you remember back to your first company, to the beginning, how did you approach an angel investor? Did you have any angel investors? How did you approach them? Who was that? How was the process there? Just as a first round of an introduction, maybe you start.
Maybe that's a good question for you, because we invested in Amorelie, therefore maybe it's a good question for you.
Sure, I can answer that. So when we got started with Amorelie, where we knew we needed financing, and then we turned to not only a venture capital fund, but also to both trusted friends as well as business angels. So SB 21, which is now SB 21, back then it was well, it was still the group that you guys are today, but you didn't have a name yet. But we knew each other from university, and well, we figured it definitely makes sense to have angels on board just to get a little bit more operative experience and expertise, especially in the phase when we were just starting up.
All right, thank you. Sebastian.
So in my case, it was definitely painful. I think that was the most painful like capital raising I've ever done, because you don't have a brand, you don't have a product, you don't have anything that would give people trust in that you're the right guy out of 100 that he wants to put money in. So in my case, it was, to be honest, a pretty cumbersome procedure of like pitching, I think, 50 people, and then 20 would reply to your email, 5 give you a meeting, and then 1 ends up investing, which means 49 times you walk out of the room. Or you send an email, with a bad experience. I think this gets better and better over time. First of all, because you're building more relationship and experience in how to approach investors. So I think it's the first capital raise is the hardest, and then it gets easier from there. And I think what I learned is, first of all, I think fundraising is mainly storytelling. So it's not so much. I mean, sure, it's about you have to have your revenue or your vision in place. You have to be in the right market. But I think the biggest difference you can make is by you can pitch the exact same startup with the exact same team in very different ways. You can somebody can get bored after 20 seconds because you just throw hard facts at them, or you can tell a compelling story. And I think this is what we figured out in Credit Tech. We built quite a good story on the equity side, which turned into substance with the capital that we raised. And I think this was my learning from kind of the very hard fundraising to now. It's obviously a lot easier. Like, you send an email to 2 people and 2 people invest. Was slightly different in the beginning.
Right. So that's where you're going to be in a couple of years if you do it like Sebastian.
Or anybody.
Or anybody, yeah.
I think from us it was probably even harder. We started raising in 2008, and that was in the middle of the GFC. So we were traveling around Germany to get 20,000 euros investment, which ended up at 150,000 euro. That was our seed investment. Looking at that now, that is probably 10% of an average seed round in Germany. Our first valuation was 600,000 euros. So should have invested.
Yep.
And for us, it was pretty much the same. I had no network. My 2 co-founders had a good network. They studied at EBS, and that actually helped because there's kind of more of a network. You also EBS, and I think that helped us tremendously. Also, one of my co-founders used to be a banker before, so there were some people in his network who had a bit of cash. And that ended up at 150,000 euros with 10 angels. So that shows you the amount. And that was the only time I actually did work with angels as as on a receiving part.
So you talked a little bit about the history. Kind of, do you see that it changed over time? The access to business angel money, like in very special business angel money. What is your experience now? Maybe for also your second venture, and what you see.
The second venture kind of goes with what Sebastian said. I probably would refuse to work with most business angels. So I'd rather not take business angels, because what I see is, for them, it's their personal money, which tends to get them more involved, which I don't want. So I would.
Depends on what you're looking for, right? If you're looking
Depends
for
what you're looking at. So
experience,
that's my personal opinion.
Yep.
So obviously there are different founders who need people like you guys, or like Sebastian with a certain experience around, I don't know, fulfilling and logistics and all these things. We have angels in my new business, which we have in a subsidy, and an SPV, like a special vehicle, where they have no access to reporting whatsoever. They can always call me, but it's basically as I want to have a pull relationship and not them coming to me. And I think what Sebastian said, it's the main funding we got was from a VC on a PowerPoint, and I do think VCs tend to move closer to early stage and with second-time founders, but the overall access to money is very different, I would say.
I think in general it did get easier to get business angel access, because there's just more business angels, at least here in Berlin. There's people that, when I got into the internet industry in 2008, there were like maybe 10 business angels around, and money came from Rocket Internet or from Team Europe or so on. If you get out there today, there is like hundreds of people, because there's more successful exits. All of us today, we have money to invest, which we do. And that wasn't the case 10 years ago. Yeah? So things got easier, but picking up on both your points, I think it's very true to, in my current venture, like the business angels involved is other friends, because you want them to participate in the route, or you have people that have experience in certain areas where you don't have it. So like building this network and then getting money from that network is fairly important, and that didn't change over the past 10 years. There's just more money in the city, which makes it tougher for us guys to invest as well. You mentioned it, we didn't have a name when we got started in 2011, because there were just not many business angels in Berlin, and nowadays sometimes we're competing for deals. Yeah, when there's like a very good team passing their deck around the city, and then you just want to get in. That's why we gave ourselves a brand, more
Right.
or less, in order to get those deals. And that's how we're trying to do it.
You talked a little bit about screening the right business angel. Now it seems to be that there's a lot of business angels for little startup. Tell me maybe how would you approach the screening process of really business angel? What are the steps that you would
As
take
a founder.
as a founder? Yeah, maybe how you did it with Amorelie, and what do you suggest for the crowd now?
So I think we touched upon a couple of things. Ultimately, you don't only want money, but you also want the value add that a business angel can give to you, and that could come either in the form of experience, or somebody who started a venture, or who doesn't even have to be a founder. It could also be somebody who's running a bigger company, but somebody who has experience in the space that you're in. The other thing could be some form of unfair competitive advantage, so that you get access to a distribution channel that you would like. So in the case of Amorelie, we could have theoretically, for example, taken on an angel who's more in the B2B retail space, or in the private label space, to help us once we get to the stage where we would start to develop private label. We didn't have those business angels on board, but theoretically we could have done that. So I think to me that's one of the biggest criteria that I would look for. So the actual operational value add. With you guys, back then it was pretty much the current CMO of Zalando back then investing in our company, the current CEO of Zalando investing in our company. That helped us a lot whenever we had any questions regarding marketing. What are typical TV purchasing rates? How should we structure our fulfillment, et cetera, et cetera? What are the typical cost base for a parcel that we would ship? We knew that was just one phone call away, and that actually helped us in the beginning tremendously, because we didn't know that. So that's the entire area of expertise. And then second is always look for good connections to other venture capital funds or to other investors. So the other concern that you have, obviously, as a founder is how do I secure my next follower on financing? So if you have people on board who can help you get in contact with VCs and with other forms of financing, that obviously helps. And then last but not least, I think we all want to work with people that we like. So even if the first two criteria receive a big green check mark, I would still not work with somebody that I don't like.
All right. So
But
Sebastian,
can I
please?
just
Sure.
jump in there? What I found is actually that the help with TV buying rights and logistics is in Berlin, maybe not 2008, but now it's also just one phone call away for everyone who's not invested in you. So if you would ask me if I can help somebody with, I don't know, the retail food space, like share my experience with food delivery, I would do that no matter if I'm invested. What I do a lot is I don't invest a lot, but I always say, hey, you can always call me up and access my information.
Of course, you have
so I
vested
don't think.
interest. I guess you're even more inclined to help if you.
Yeah,
know
but I
that you
do
have
think the
100K at
network,
stake.
you do have access to all the knowledge which is out there, because the
But we
sharing.
do.
Would you
by
give
now.
your biggest secret? Would you give your biggest secret just to somebody that's
But
asking for it, or would you
I
only
think
give it if you
there's
have an
no,
upside?
to me, there's no, in the end it's execution, but there's no biggest secret to most of the things we do. I think it's, in the end we do a job, and obviously even if I would be invested in you and I would have the crazy credit tech algorithm, I wouldn't even share that with you even though I'm invested. So my super secret sauce I wouldn't share with my startups, or I wouldn't share with anyone.
I think
Not even
the-
if I put 50K, and that doesn't matter for me in the scheme of things, I wouldn't share that.
So tell me,
the
what
big,
are you?
Just one remark to that. I think the big difference is that I agree when we talk about ourselves now, so as a, for example, second-time founder with the existing network in place. However, if I imagine coming to Berlin, not really knowing anybody, just with a great idea, then I think it does make sense to get people involved who have already been part of the ecosystem and who can then connect you to people or who have the experience firsthand.
That I don't dispute. I'm just saying you still get the access if you don't have the domain expertise inside your business angel shareholder.
So
network.
do you think there is something else next to industry knowledge, right? Industry knowledge and access to further funding around that is very important in a business angel? Is there something else?
Yeah, that they leave you alone if you ask them to. That's really what I found most disturbing about business angels, that I see a lot of friends investing with the notion of, oh, I should invest in that business because I can help them. My most successful investments are the business where I have no touch points, where I'm having dinner with the founder. For example, I invested at a 10 million round, significant amount, like good 6-digit amount. I never spoke with the founders about their business ever, because they're much better in what they do than me. Same as a cleaning company in the in Australia, making now triple million-digit revenue, like a fucking cleaning company. What can I add to that? Their founders are just so much better than I am, so I invested. And what I see is the most successful business angel investments I did are companies where I cannot involve myself because these guys are much better in what they do. And all the startups where I was like, oh, I can help them because I know a bit about food delivery, or I know a bit about marketing or TV or whatever. These are the businesses that ultimately, in the big scheme of things, don't work out financially.
But I think
respond to that, please.
most business angels don't get super actively involved. It's not like that jumping into the office of the startup trying to change everything because they think the founders are doing it wrong. Yeah? I totally agree with you. The founder knows how to do best. Yeah? You're just there to help. It's an offer. Yeah? It's an offer that the founder needs to take. Honestly, most business angels that I know wouldn't get actively involved unless they are asked for it. Yeah? You get your monthly reporting. That's it. You may ask a few questions through an email. If that's already too much to handle, then okay. But I think in general, business angels are not really actively trying to get involved in daily operations of a startup. Therefore, I would still take them on.
I'm not saying just on the. I agree with you that, but also on, if you look on the next capital raise, what I found is that, I mean, that might have changed because my experience is maybe outdated, couple of years. But what I found is also a lot of business angels don't work professionally when you come to further rounds, how they engage. They're more vested when it comes to money because it's their own money. It's not like we see, okay, I take a portfolio approach. Even though they say they take a portfolio approach, it still hurts them more to lose money. And I'm 100% sure you guys with the more professional setup, I mean, you're basically a micro VC. You're not a classical business angel. So obviously you operate in a different way. I would say your average business angel who just puts in a bit of his private money that he has here and there is someone I would stay away from. If you talk about you guys, that's totally different setup because you professionalized yourself, you gave yourself a brand, you have very different setup. So I wouldn't say you are a classical business angel. Maybe you're super early stage
We're
VC.
super early stage micro VC maybe, yeah. But that just tells you, okay, you have to like do your screening when choosing the right business angels. Yeah, I agree. And not everybody that puts money into a company is a good business angel. They can get pretty hefty, but I think I'm still in general convinced that the concept of business angels as active parts of a very early startup stage are helpful for a business if you don't pick the wrong ones. Yeah?
Let's look onto the other side. What do you look in when you give angel investments? What is your criteria? Are there some points that you do a checklist of what does a founder need to bring with them before you invest? Is there something?
So you gave a hint already. I think for me, in the stage that I'm investing, I'd say it's 95% team and then 5% like what exactly they're doing. Like what I don't look at is stuff like financial plans, unit economics for a like seed or pre-seed company because it's 100% sure that it's going to turn out in different numbers and different unit economics. Or maybe they do a different geography or a different market or a different product 3 months later. I think like my key learning is early stage, you can't plan. Like you can only set up a process to fail and learn very quickly. Like you can test some hypotheses and then either it works and you scale it or it doesn't and you change something. That's why I think this is the biggest kind of quality that I'm looking for in a founder. Like how quickly can a founder execute and thus learn and potentially pivot. I think the other thing is founder for most businesses, like leaving special kidney and biotech stuff aside, like I'm talking about the normal average startup, I think the founder also needs to be the the selling person. It needs to be somebody who can sell, and I'm not only talking about investors, because it's selling to employees, it's selling to the press, it's selling to suppliers. Somebody in the team needs to have this quality, and then the other component is, depending on the case, somebody who's really strong in technology. I don't think it has to be a CTO, it can also be a CPO, somebody who's strong in product, but usually the best setup is one guy who's kind of pushing forward very kind of fast on execution, and then somebody on the other side who's really kind of going into details of technology and processes and making sure also like substance is building up with what's being sold. And then what I also learned is you shouldn't get kind of blended by brands. Like if somebody was at Harvard Business School or 4 years at McKinsey or 3 years at Rocket, like this is not a good filter mechanism. Like when I was at Rocket, it was the hiring scheme was pretty much let's hire people from Goldman and McKinsey because somebody else checked that they're smart. So we don't have to do that. We just have to see if they fit to the team in some way. I think for founders, this is very different, and it's sometimes, it turns out that the 23-year-old kid who dropped out from college is much, much better than the McKinsey principal who's not executing but kind of overthinking stuff and not really pushing the company forward.
Right. So and just to add on that, I mean, you mentioned in the very beginning, it's about storytelling. I totally agree. There's like, usually when you're sitting there, so we meet once a month, we do like a pitch night where we listen to startups, 4 or 5 startups, an hour each. You make the decision pretty much instantly. So you see them, and after that hour, you know whether you want to invest or not. Sometimes there's some background checking, but in I'd say 80% of the cases, you know immediately if you want to invest or not.
Right.
It's a quick decision.
So maybe for all 4 of us, here founders in the crowd, and the question would be, how can we really approach? How can the founder approach you to get your not only the money but also your experience and get in touch with you? Maybe you professionalized everything. So how is that?
Yeah, we have a website. You can apply there. But I think it's a lot about personal connection. Yeah, so making that phone call, trying to get. I mean, maybe you don't have our contacts, each of us, but maybe somebody that can reach out. Yeah, and it's always better to get that kind of personal intro about somebody that already knows the founder or the team or the idea, and that can give a little bit of background, because we receive, I don't know, maybe 30, 40 pitch decks a month, and then you have to select, and it's always easier if you have that kind of personal connection somehow. Right. There's always somebody, and if you're a very active founder and really work hard in order to get business angel money, then there will be a way to get in touch with all of us usually. I mean, and be it just after this panel to approach you and say, okay, here's my card, this is my idea, and I'm going to call you tonight or whatever. It's good to get a personal connection.
Or go to parties where you go, right?
Oh, we'll go to parties. We go.
But not too late then.
Not too late, very early. So come early in the parties where you are. So what about you? How can people approach you? What is your...
I mean, it's very similar to what Olli just said. So we've also formed a little bit of a micro angel fund, so to speak, or a structure called Starstrike Ventures. So we have a very shitty, ugly website, but release early, and we just did that, and now it's out there. But it's, I would also agree, through personal contacts, and then I guess once you're in touch, then it's not about flooding your potential angel investor with a lot of information, but keeping it really short and concise, doing the storytelling that you talked about. So I would never, in my first approach, I would never send my entire slide deck, including appendix plus business, so the financial plan, et cetera, et cetera. But I think a very concise email is great, ideally through a friend that you have in common, or a touch point that you have in common. And then really trying to boil down the story in 2 or 3 sentences, why it's important, which big trend Is it covering or relying on or building upon? And then, yeah, pretty much putting out there what you're asking for. So we are doing X right now. We're in the middle of our seed fundraising. We want to raise 700K. Ideally, you can already say, well, 80% of that is already committed with those investors. There's just another 100K up for grabs. You want it. So you have to, investors, and I guess that at least I can't exclude myself, it's always a little bit of a lemming kind of game that you have to play. So I always say, when I was out fundraising, I tried to squeeze as many meetings as possible into the shortest amount of time possible, so that I could always say to Ollie, I have to run because now I'm meeting other investor X, and that hopefully exerted a little bit of pressure. And,
Well, worked out, right?
Yeah, I do remember that we were actually oversubscribed, and you guys
We wanted
you convinced us to increase the size of our round back then.
Right,
Yeah,
so
so it worked.
it was a smart idea to raise.
Yeah.
So you're talking about the fear of missing out. I guess that's right
Yeah.
for business
Yeah,
angel
so
and for
it
later
is a little
stages.
bit of psychological warfare that you're getting yourself into, which is also fun.
Yeah.
I think it's very
Tell us.
true. I think these are the two most important points. The first one is, I think, business angels, or in general, people that are very busy have a very short attention span. So what you don't want to get is like a 40 slides presentation. Luckily these days nobody writes these 60 pages business plans anymore, but still you should get in 30 seconds to who, what, why, and how. And in a compelling and kind of exciting way. Otherwise, I think I wouldn't spend kind of reading like 2 minutes on an email just trying to figure out what they're actually doing and why this is meaningful. And the other one is, I think I was just kind of going through my deal list, and I think I haven't done a deal that didn't have any connections to my existing network. So just somebody who sent me an email out of Israel, and then I said, oh yeah, this sounds very smart, and your LinkedIn profile is cool, let's have a call, and then I invested. Like, that never happened so far. It was always through somebody that I knew in various ways. So somebody who was invested out of my peer group, or somebody who has worked with this person, said, hey, this guy was whatever, head of marketing at Movinga, and now he's doing something else. And then it, of course, helps. Like you, as an investor, you always want to have the feeling that you're chasing the deal and not the deal is chasing you, which is exactly the FOMO that you just mentioned. You need to have the feeling as an investor that you're missing out if you don't do this deal. And this obviously helps if you can say, hey, your friends are already invested. And now if we like you, we might open up a small slot for you in this round. It's probably another way of saying nobody invested, but there's some people who would potentially invest, and we're going insolvent in 3 weeks, and we really need money. But you perceive it in a very different way as an investor.
Okay.
So I think these two things are important. Get to the point quickly and create some kind of FOMO.
So the magic is how you put everything, how you structure mails, pitch decks, and how you approach these
Exactly.
people. Yeah. Do you have anything?
I can add very little to that. Just if I look back at the investments I did, they all came through someone who I really trust, or people I trust in my network, not just through random, like, wider area net referrals, and always people that I trust who have more to lose from a financial side invested more than I did. So it's like, okay, if he puts in 700K and I only put in 200, that's a lot more for him to lose. So he must know what he does, and I trust him, so I'll chip in.
Well, he has way more money than you do. Yeah, so
Or he has way more money than I do, but normally I do. That's kind of my profile, and then I actually do very little to no due diligence. I'm like more, do I feel the product? Do I get the idea? Do I like get the overall scheme of things? I don't even look at numbers, to be honest. I'm like, do I get it? Yes, no. I'm not really arguing about valuation because somebody else probably has done it before me, and I don't have the time and I don't want to do it, and I just put money in. If it works, it doesn't matter if it's a 10 million or 12 million valuation in the end of big scheme of things, and then I put money in. Most of the time I even give my rights to that friend or so that can work in my name on the deal, so I don't have to be involved. And the founders have my number and can reach out if they want to, or meet me for a beer, but that's kind of how I operate. Very little to no due diligence.
I think, just adding on this, I think this is a very good point. I also realized that at some point you're just also capped on time. Like if you have more than 10 investments, you cannot think about every company and every problem all the time, which is, like in my case, I also decided at some point that I'm either building companies myself, which means like super early, and then you really kind of look for the right team and help them, whatever, picking the right accountant and, you know, creating a Facebook ad account and so on. And then on the other side, I'm channeling my investments more as an LP through existing venture capitalist funds, because here I know that people are doing full time what I'm lacking the time for. So I think there's also kind of a blurred line between like being a very passive angel and then versus just becoming a limited partner in a fund like B10 or Point 9 Capital or La Familia.
And what I also see is, I mean, adding to that with the time span, there are a lot of people in Germany or Berlin especially who put in 5K here, 2.5 here, 10 here, and then they call themselves super angel. And they're like, yeah, I'm an investor in X, and then you look at the Handelsregisterauszüge and you're like, they have 0.00007% of the business and run around like.
But it might be a 3x.
Yeah, or 2.5 after Leclerc. I don't know. And then over a 10-year time span, it's actually a pretty shitty deal. You could have done it at Sparkasse. But what I'm saying, what I did at one point 2 years ago, I sold probably 10 shareholdings I had at cost. So it's like, I don't know who wants to have it. It's a 10,000 euro investment. Maybe it's worth 20,000 now. I'm giving it to anyone who wants for whatever you offer me. If it's 12, I don't care. Just to get it out of the system, because there's the mental, the Bandbreite, the bandwidth I had with notary shit, my Jahresabschluss, I had to take care of all that stuff. I didn't, for the money and for the profit, for the potential profit of 5 to 10, even 30K, I said, fuck that, take it.
Is that also a suggestion for founders to have a limited amount of numbers of people in their cap table? Or what
I mean, we have 5 people in our cap table, but we have 10 friends and families invested in Talon One.
Right.
They're all in a special purpose vehicle where I'm the MD of. So that makes things very easy.
Is that also you guys'
you have
recommendation?
To funnel it at some point, you have to funnel it in order to not get overwhelmed by collecting notary shit. Huh? So if you need to walk around and get like 30 or 40 signatures that are notarized, and then there's like 3 missing, then you're just really chasing after it. So agreed, man. You have to put it at some point. You have to put it into special purpose.
Yeah.
I guess best practice these days. Back then it was you pool people in a GbR. By now, for tax reasons, that doesn't really work anymore. But at least you try to summarize people or individual shareholders by dedicating one pool lead who gets the kind of the power of attorney from all the other small investors. So that's at least one way of not having to run around and collect 30 signatures, but then only having to collect 5 signatures.
Right.
So if you want a lot of investors for whatever reason, I would also advise to keep that number small. But if you want that, then there is a decent workaround by doing it like that.
Right.
And we also have a couple of investments where that's actually working.
We're pooling amongst each other, sometimes
but that's working fine.
pool lead, sometimes we are pool lead, whatever.
So let's switch a little bit. Let's talk about topics. Let's talk about the interesting topics that emerge. I know that you do something in food. Food is an interesting topic these days. Tell us.
I think it's not just about food; it's about vertical brands nowadays. So I think we saw first wave of startups coming up with this like direct-to-consumer approach, and there's more and more coming from that side. We're looking more and more actively into that area. I think we have the Lilido investment together. We have a couple of others. The 2 members of the Saarbrücker 21 team, David and Lucas, they just started their Sunshine Smile, which is like a bracelet thing coming from the US. there's tons of vertical brands really approaching. We really haven't found like the secret sauce in order to identify the right ones yet. I think there's like different approaches. There's like a performance approach, usually through large marketplaces, Amazon, Zalando, or whatever. And there's some that are really using the influencer Instagram stuff. So there's and there's brands, the Invincible Brands, for example, was super successful exit, and they really played that role very well, building a very successful brand there. There's a lot of those coming up today. I think we're seeing a wave of those brands coming. This is an area that we're getting more and more pitches. That is interesting. And then there, obviously, Sebastian can talk more about that. But FinTech is still like huge because there's still too many big old-fashioned banks out there that need some makeover.
So Sebastian, you got overruled by being the largest FinTech invest in Germany recently. So how can you be on the first place again? So what are your plans? Is FinTech a thing? I know that you are also in the crypto topic that you're interested into that. Talk a little bit about what's happening there. Maybe some interesting trends.
Okay. So on the first question. I don't think it's a goal to be the best funded startup because I think there's a general structural problem that the quality or size of a startup is being measured by how much money did they raise. So if you go out and tell reporters or other people I raised 40 million, people will be like, oh my God, this has to be a cool startup. Versus if you say I raised 5 million. What people don't see is first of all dilution. I mean, it might be the exact same numbers, just somebody deciding I want to give away 50% of my company versus 10%. And the other one is liquidation preferences. Like without getting into techniques, if you raise on a 5x liquidation preference, meaning the investor gets back 5 times his money before it is shared pro rata, you can raise on any valuation and any amount. Because you get immune because you make your money, you make a 500% return anyway. So that's why, no, it's not a kind of goal for me. Also, I'm not actively invested anymore and sold all my shares except for like some virtual ESOP shares. So no, I don't think that's like a healthy race. On the second one, in my case, it's FinTech and crypto. FinTech because I spent most of my professional career in FinTech and then more specifically lending. And crypto is something that I'm not a kind of technical expert. I'm interested from a capitalistic point of view. Like I couldn't explain you how exactly a ledger works and blah blah blah. I know what a blockchain is. I know kind of what the different technologies are, roughly meaning. But for me, it's more about investing in the coins and investing at the right time. And then I'm also starting to do some infrastructure investments. So I think these two areas are. I'm not sure if it's kind of the most exciting ones, but it's the only ones that I have a footprint and a network and a rough understanding. Like in food business, I personally wouldn't have any clue, or flying cars or moon journeys. Like sounds very exciting, but I couldn't tell if two people were pitching, like what are the important drivers and what makes the one successful and not the other. So these are the two areas for me. I think if I were to choose right now where to kind of build my expertise, it would be more on robotics and more kind of, I think startup as we knew it was very kind of lightweight in the sense of lead gen and kind of, technology started emerging. I think it's going to get more and more deep tech topics, and I would have more and more a struggle to understand what's going on.
Right. Christoph, what are you sure? What are the trends to invest in? Do you have any trends?
I hardly do trends. They're very good people who spend a lot more time in like looking at a lot of stuff. I guess like you guys who like constantly have a deal flow. I invested a bit of money in a fund of a friend from Philip Murring, tiny supercomputer. They do a lot of stuff in San Francisco, around the world, US, UK. So that's my progressive approach, but I have somebody doing it 24/7. And I'm super opportunistic. So when I see something that works, I mean, like, for example, good example is the cleaning business. They basically are cleaning materials like Casper for overachieving mid-30s. So you buy eco cleaning detergent. Super successful. Is that a trend? I don't know. Is it working? Yes. Are they killing it? Yes. Is it on anyone's radar? No. Is it a good business? Yes. So I put money in. Do I understand a lot about app tracking? No.
Okay.
So, but did the business work? Yes.
Very opportunistic approach, right?
Super opportunistic. But I would say probably that goes for the most of these guys. It could be the coolest, most type thing. If it feels funny, you don't do it. You don't touch it. And if it makes sense, you guys probably would also invest in a business that is totally out of your area of expertise. I mean, medical now with the bracelets, I would say it's a startup, yes, per definition, but it's not crypto, it's not finance, it's not robotics, it's not AI. Probably they put an AI and Bitcoin component to it, but
Self-learning bracelet.
Self-learning bracelet, but it's in the end it's a medical supply business of some sorts. So yes, it's med tech, you probably call it, I guess, but it's also opportunistic. Good team, seems to work, so do it.
But trends still help in the fundraising, right? If you're in the middle of
telling one fundraising in Germany didn't work because we're not finance, we're not insurtech, we're basically marketing tech infrastructure. So yes, if you would add blockchain to it, that would work.
But there are trends. I mean, sometimes you just follow a trend blindly, and then you have to be very careful not to invest at valuations that you shouldn't invest in certain companies.
And then the trend dies off, and then you're stuck with a product that nobody wants. So, for example, when we raised with Lieferando, there was no Lieferheld, there was nothing, and everybody was like, we had probably over 100 business angel rejections because people were like, why should I order online? I call them up. You're like, yeah, but maybe people want to. I think so this was ahead of the food delivery trend, and we're just thinking, let's do it. So I would, as a founder, I would say just follow your own path. Don't do the business model analogy, McKinsey style. This is what we should do because this is where the market goes, and this is a perfect business model on top of that trend.
Follow your own path. I think that's a very good closing word. We're already out of time, so let's give a hand of applause for these great people here on the stage. And this is your opportunity to actually speak to them if you need investment these days. So grab them because I'm sure they have other appointments. All right. Thank you.
Thank you.
Thanks.